So in this video, we're going to talk about what Ethereum co-founder Lubin, Joseph Lubin, says about regulations. And he says cryptocurrencies should stay unfettered from regulations. Now, it's interesting that he says that because his stance isn't quite that clear. But let's just keep going. In this article, he says it's a tricky balance. Wait a minute. And one of the things, let me say this real quick. One of the things that I always talk about is that people always have their bias. So keep that in mind, because this is evidence in this article. And it's okay. We all are biased based off of what's in our interest, based off our beliefs developed from our past. We all are biased in some way. But keep that in mind as we read through this article. He says it's a tricky balance, but Ethereum co-founder Joseph Lubin believes the cryptocurrency market should embrace regulators. Embrace regulators. Unfettered from regulations. Should embrace regulators, though he also points out it's vital not to stifle innovation. Lubin, here's the problem here. Embrace regulators, but don't let regulators stifle innovation. Again, you don't get to tell regulators where not to go and what not to regulate. Lubin, who's at the helm of consensus, whatever that is, welcomes regulation to the cryptocurrency space, both in the United States and other parts of the world. He made the comments to Bloomberg at Paris Viva Tech Summit. Perhaps his remarks added some relief to the market as the leading cryptocurrencies are currently trading in the green again. I doubt that made the entire market go green. But anyway, it is really valuable to have regulators in this space taking a look at some of the complicated practices in much less regulated situations. So whether it's with respect to cryptocurrencies and cryptocurrencies, in my opinion, should remain unfettered because they have tremendous use cases, and whether it's tokens representing securities or other assets and how that maps into security law, we're happy to see the regulators, said Lubin. Okay, so here's what he's saying. In the area of securities, we want to see the regulators. And part of the reason he says this guy's a major public figure in the cryptocurrency space. He's at the helm of companies. He heads major companies. So he co-founded Ethereum. So it's not a good idea for a public figure to say, no, we don't want regulators. No, stay away. No, we don't like you. No, our whole goal is to avoid you. That's not the politically correct thing to do, and probably could make him a bigger target. Again, he's biased. He has a reason to talk in a way that is politically correct. I want you to take note, though. He says, we don't want them to mess with the technology, but they can come over here and figure out if something is a security or not. So the security side, the security law, they can do that as long as they don't mess with tokens, which is what Ethereum is known for, right? ERC20 tokens. As long as they don't mess with tokens and that have a use case, basically. So whether it's respect, they should remain unfettered because they have tremendous use cases, or whether it's tokens representing securities. So if they're representing securities, that's fine. Sorry, I misspoke there. If there's tokens representing securities or other assets, that's fine. But if they have a use case. But what's interesting is how he defines use cases later. Let's keep reading. If Lubin isn't worried about regulation, it's pretty safe to say that the balance of the cryptocurrency community shouldn't be either. This is nothing more than writing, marketing, and programming designed to make other cryptocurrency people, this is, hey, one credible celebrity isn't worried, you shouldn't be worried either. The question is, would Satoshi Nakamoto, who created Bitcoin, would he be worried by this article? And I believe that he would be. The important thing to note is that regulators don't appear to be turning a blind eye to innovation either. They're not going to be able to stop innovation, which may explain why they haven't responded to the market with some blanket policy or ban like China. Policymakers, too, are looking to strike a balance, and perhaps that's a function of blockchain veterans like Lubin making the vision of decentralization clear. Well, I think the true decentralization scares the heck out of government, but the technology is so difficult not to embrace it. Here's the most fascinating thing. If you look at something like Google, I had an acquaintance one time who worked up in government, and he told me one time, Facebook will never disappear. It would never disappear. He said the entire company could go bankrupt and it would not disappear. And I said, what do you mean? He said, well, the government would bail it out. And I said, why? He said, it's always been important for the government to be able to keep a very complete database on its citizens. And the government has spent years trying to figure out how to do this. But privacy laws wouldn't allow it. citizens wouldn't allow it. I mean, if you call someone on the phone and say, hey, I need, your address, what do you need my address for? You don't need to know my address. Well, I need your social. Well, you definitely don't need my social security number. I need your, an alternative phone number. Why would you need an alternative phone number? So the consumers were extremely reluctant to give out private information until Facebook. And then they give it over willingly. And of course, the government primarily is using this for noble purposes. As citizens, it's scary because it's always noble purposes as long as your government is noble. And in the history of mankind, we've never had one form of government that has remained noble and never became corrupt. And this is the part that gets interesting. But Facebook and Google through conveniences. You'll give up your location. You'll let your phone, which is basically a location device, and I'm guilty of this as well. We'll use our phones, and we know that it's tracking our private information, but we allow it because it's convenient. Facebook is a convenient way to communicate and connect with people. Google offers very convenient apps, very convenient services. So therefore, that's the challenge. So what's interesting here is blockchain technology can be very, very convenient to corporate interest and governments. And therefore, they might not like the decentralization. They may not like some of the implications, but they may be willing to tolerate it because the technology itself could be so useful for them. The challenge is going to be to see how they push back on it. So this is a good example of how regulators could split hairs. Consumer token versus security. Regulators have yet to provide a clear-cut definition of what compromises a security token and what does not. Perhaps they should ask Lubin if they haven't already. In order for the market to operate as it was intended, there needs to be a distinction between what are security tokens and what is not. I have no idea why this matters. Who determines how the market was intended to be used? And if you go back to origination of Bitcoin, why does it matter? Despite the fact that the US SEC Chairman Jay Clapton said he has yet to see a token that's not a security, he may just not be looking for the right characteristics. Well, of course, if you're the SEC and you're biased, this is what you're going to say. And by the way, this is a great way to stifle a lot of the technology. Lubin said that as far as regulation is concerned, he's honed in on security laws. He said they are able to issue both security and utility tokens. We focus on, this is his quote from Joseph Lubin. We focus on getting very clear definitions and helping regulators around the world understand that there are these network business models that benefit from membership tokens or tokens that represent consumption of scarce resources. And as long as these projects are selling tokens to token buyers that make use of the token, and they're not selling in large quantities to speculators or hoping to make money by the actions of others, then that is a good, clean definition of a consumer token, said Lubin, who added that this is absolutely what Ether is, and described it as crypto fuel. The only challenge is, again, he's biased, so he's trying to paint his Ether in the clear. The challenge is, Ether was raised on an ICO, and if you were going to go by that argument, then Ether breaks the ICO model. I mean, and you could argue, well, ICOs shouldn't be allowed going forward because that has a security characteristic. Again, we're splitting hairs. Here's my question. Why does it matter? When it comes to securities, as a sophisticated investor, you can invest in all sorts of securities. Sophisticated investor, right? Think about that word, sophisticated. Maybe it means smart, understood, whatever. All it actually means is that they have an income of like 200 grand and a net worth, I think a combined net worth, I think of $500,000. It's a dollar amount is all it is to qualify as a sophisticated investor. It doesn't matter what your past is or what you do. And I believe, my opinion is, these sort of security laws ultimately just stifle the little people from being able to take part in a game that is oftentimes rigged for the wealthy. But cryptocurrency levels it out. Cryptocurrency totally levels out the playing field. And here they are inviting regulators in, and all regulators are going to do is stifle innovation. They'll create a market that can be ripe potentially for monopolies, and they're going to prevent the little people from being able to really, that's my fear. They're going to prevent the little people from really being able to benefit from this technology, especially on the financial side. All right, now we're going to wrap it up with this market volatility. While programmers like Vitalik, Buterin, and Lubin have made it clear that their attention is not on trading, the consensus chief doesn't shy away from questions about the U.S. probe into possible price manipulation. Lubin pointed to other explanations for the dramatic swing in the Bitcoin price. This is interesting. It could be just because the total value of these monetary bases are small, and it's a very young technology, and lots of news is coming out. But traders are sophisticated. There's that word again. And traders will do what they can get away with, he told Bloomberg. He means rich here. When you see sophisticated in the financial markets, it almost always means rich or wealthy. They're rich and they'll do what they can get away with. It doesn't mean they're smart. It doesn't mean they're technically savvy. It means they have the money to push the market around if they want. But it occurs, and there's no necessary, you're not going to necessarily stop it. There's necessarily no way to stop it. That's what I was trying to say. So I personally still don't think it's a great idea for regulation. Do I think there are areas that the regulations could be good? Yes, but I fear that you're not going to be able to keep them in check. You can't show me one time in history where government regulations have been kept in check. So for the most part, I kind of like the fact that it's a little bit of a wild, wild west. And I do think as a whole, I believe in this statement unequivocally. Cryptocurrency should stay unfettered from regulations. That's my opinion. Put your comments below. I would love to hear what you have to say about it. And if you like this video, hit that subscribe button. Thank you so much for watching. Have a great day.